Tuesday's CPI data from the Bureau of Labor Statistics showed that prices rose 0.5% over the prior month to start 2023. One chief economist says this report won't change anyone's mind about the inflation picture. Both hawks and doves will find something to highlight. You can read more about hot and cold inflation reports in today's morning brief. That's over at the Yahoo Finance homepage. But let's take a deeper dive into the report and how it gives everyone something to like here. And there was a lot to pull out of the economic data that's come out over the course of this week, but especially as it relates to where consumers are still comfortable taking on certain prices, and then additionally where they might be pushing back. But again, it's all coming back to what this implication for the Fed is, and Fed Chair Powell focused on realizing that inflation and some of the mechanisms that they have, that they're just going to prioritize that as long as the employment side of the equation also continues to remain strong.
But
when we talk about hawks and doves, by the way, when we talk about hawks, it's people within the Fed or economists generally who are seen as leaning hawkish. That is, thinking that you really need to hammer home higher rates to get inflation down. Doves say, well, inflation's either going to come down on its own or it's already under control. And so they say, okay, we don't need to be as aggressive with interest rate increases. Lael Brainard, for example, who was just appointed to head the Council of Economic Advisors at the White House from the Fed, she was seen as being more in the dovish camp. So as our Miles Udland lays out, if you look at the core CPI, which takes out food and energy, on a month-over-month basis, it was up 0.4%. That makes the fastest pace since September 2022. On a year-over-year basis, it was up 5.6%. That was the slowest pace since December of 2021. So that's another example of, like, it kind of depends how you read these numbers. But overall, it seemed to sort of cancel itself out in the market, right, in terms of it wasn't read as overly hawkish or overly dovish because it was a little bit muddled.
now it might be overly, I would say, hawkish. I mean, look at this retail sales report. Double-digit gains. Even if you're out there picking up T-shirts and underwear that are 75% off, still you have spent money to buy these things, even though it is off at a discount. I mean, this is a very strong report.
Yeah.
And yet, you know, futures are down, but they're not down a heck of a lot. People don't seem that worried right now.
Right.